Hi, this is Karen Gaines, your nonprofit finance guide, and today I'm going to talk about when you should and should not add an account to the chart of accounts. So when you are talking about an account, you're talking about tracking a set of transactions that are being categorized all together. Creating an account is a way to summarize large amounts of data transaction that are similar in nature so that you can easily review that information when you are looking at financial statements. Okay, so when you're talking accounts, an account will go under a main category. Okay, so when you're talking financial statements, you have assets, liability, equity or net assets, and revenue and expenses. And so when you create an account, it's going to go under one of those categories. Okay, so I do have QuickBooks up, and this is a sample account, a fictitious account. And so I'm just going to pull up the chart of accounts. That's an account I recently added, but you can see all of these accounts here, and like each account is under an account type, which is essentially under a category type. Okay, so you have billable expense income, fees, landscaping services. They're all under income, which is revenue. All right, and then you have all of your other type of expenses, advertising, automobile, bank charges. They're all under the category expenses. Okay, so again, when you create an account, you put it under a category. All right, and when you're dealing with QuickBooks and you're adding a category, it's going to force you to select a category. Now it does go into a little bit more detail. For example, this whole top section here, AR, other current assets, bank, fixed assets, and other assets. These are all assets, which is a category type. But for financial statement presentation, QuickBooks makes you, choose one of these instead of just like a general asset. Okay, so and then it allows you to go in even more detail once you select an account type. All right, so that we're not going to do that right now. We're not going to create an account. I'm just showing you or talking about when to add an account and when you should not add an account. So all of these accounts here, it actually ends up on the financial statements. It'll end up on your balance sheet or profit and loss. So let's take a look here at the balance sheet. All of these accounts were created in the chart of accounts. Okay? You have your checking account, savings account, accounts receivable, inventory, and etc., etc. And here is the profit and loss. You have all of your revenue accounts, design income, discount, landscaping services, labor. You have all of your accounts that flow through your financial statement. Next section is your expenses. You have all of your expense types here, okay? So when you create an account, this is where it ends up. So the question is, when do you add an account, or when should an account be added? You want to add an account when there are certain types of transactions that are recurring. For example, like memberships and subscriptions. You may have a number of them that you pay every month. So it makes sense to create a membership account. Okay. There are times when certain expenses must be tracked specifically. Again, you want to create an expense account for that. And again, it has to make sense to, do something like that. When you start a new revenue or funding stream, that's a good time to start a new or create a new account. And if when you look at my example, you can see, for example, design income. That is a revenue type. And when you click on it and open it, it'll have all of the clients who have received design services and have paid income or money for a design. All right. So really, when you have, I'll go for with another example because so far I've just provided P&L examples. Let's say you have a fixed asset. Let's say you purchase a building. You want to create an account for that under your fixed assets account. Add a building. All right. So those are cases in which you want to add accounts. Okay. Now, when should you not add an account? You shouldn't add an account when there is an infrequent transaction that comes through. Let's say you purchase just something that you normally would not purchase. Let's say a step stool. Let's say you purchase a step stool and that step stool is $200, but you're not going to be purchasing a step stool or anything similar to that for a very, very long time. You don't want to create an account just for the step stool purchase. All right, you may just want to put it under office supplies or something. Don't create a small equipment account when you've made one step stool purchase. All right. An account should not be added when you are paying a vendor. Okay. For example, and I've kind of showed this in the chart of accounts. Let's say, I think I had pizza. Okay, Pizza King. Let's say you were purchasing some pizza, and you decided to make it an account. Well, that's not a time and place. That's not a time to make Pizza King an account. It's a vendor, but it's not an account. And I've actually seen this type of activity quite a few times, where folks create an account, but it's not an account. It's a vendor. So this Pizza King should not be there. Should be a vendor, and it should be under like meals and entertainment or food or something along those lines. All right, and you can see it flows right onto the P&L, Pizza King. And when you look at it like this, it looks odd. It looks weird. So when you have a vendor, do not make it into a category in and of itself. Okay, and there are. There are times when you should do that, but it's very few and far between. Generally, you don't want to do that. All right. And also, when it comes to cases when you should not add an account, you want to avoid overusing accounts. So when you look at your chart of accounts, or your profit and loss or your balance sheet, you should not have tons of accounts or unneeded accounts. Each account should have a purpose, because the more accounts you add, the more complicated your financials are going to get. Now, if you have a very large organization and you provide, a lot of services and you need to, that's fine. If you are a smaller organization, you should not have tons of accounts in your chart of accounts. All right. You also want to avoid duplicating accounts. I've seen cases of that, and sometimes you just need to merge accounts or merge similar type of accounts, so that you're using less accounts, and again, your financial statements are less complicated. So those are just, some examples of when you should not use an account. And I want to add one more item, and when you should not use an account. You don't want to use an account when you have some type of short-term project. Okay. and you're trying to track expenses or revenue just related to that one project that's probably going to only last, 1 or 2 months, and you're never going to use it again. All right. In that case, you want to use, if you're in QuickBooks, you want to use maybe your classes feature, or you may use sub accounts. That might make sense as well. But you don't want to go just creating a whole bunch of accounts and you're not going to ever use it again, or you may use it a year from now. All right. So just in general, when you are adding an account, it needs to make sense to do so. It should provide a clear picture. It should be readable, and it should add to the readability of your financial statements. So I hope that has been helpful for you. Let me know what you all think. If you're watching via YouTube, make sure you like, comment, and subscribe. Thank you for watching, and have a great day.